As an international financial centre, Hong Kong has unique strengths, but also faces rising competition from other cities on the mainland and elsewhere. While geopolitical tension continues to mount globally, the mainland's robust economic growth, wealth accumulation, and emergence of many major leading enterprises provide unprecedented opportunities for Hong Kong. At the Insight Forum organised by Our Hong Kong Foundation, Professor Lawrence J. Lau, Vice Chairman of Our Hong Kong Foundation, spoke on the topic Hong Kong Way Forward, the future of Hong Kong as an international financial centre. He and a panel of guest experts shed light on strengthening Hong Kong's competitive advantages in this new era.
Hong Kong actually has been very successful as an international financial center up to this point. Now, what we want to know is what does the future hold for Hong Kong? And I want to start with a review of the global trends, because the world has changed over the last 50 years, but even within the last 5 years, the world has changed a lot. First of all, I want to say that the center of gravity of the world economy has been shifting from North America and Europe to East Asia, and within East Asia to China in particular. And this is happening in GDP, in international trade, in wealth, and in manufacturing, and in innovation. So it's really a continuing trend. Now, you might say that there's the epidemic, but we hope that the epidemic will just be a blip if you look back, say, another 10 years. The Chinese economy will be growing faster than those of North America and Europe in the next 10 years. Chinese real GDP per capita is actually still in a range which allows the GDP to grow relatively fast. I'll show you a chart a little later. My own forecast is that by 2030, the real GDP of mainland China at market prices will reach parity with that of the US at around 30 trillion in 2021 prices. Now, the World Bank and the IMF, they've been claiming that the Chinese real GDP is actually higher than the US already, based on purchasing power parity prices. With the growth of real GDP of 6% and a national savings rate in excess of 40%, the wealth of Chinese households and institutions will be growing by leaps and bounds. It is this wealth in China that will drive the Chinese demand for assets, both domestically as well as abroad, because of the need for diversification. This is comparison between 1970 and 2020. Notice the red wedge. That means China was only 3% of world GDP in 1970. By 2020, China is almost 20%, 17, 18% of the world economy. In terms of foreign trade, you have the same situation. Less than 1% of world trade in 1970. Today is actually almost 12% of world trade. And similarly, you can see the shrinkage of the American share and the expansion of the East Asian share. Now, this is the chart I told you about. On the vertical axis, we have the rate of growth, real rate of growth. On the horizontal axis, what we have is the per capita real GDP. Now, the red dots represent China, the yellow dots, Japan, and the blue dots, the United States. You can see is that China per capita GDP is now within the range between 10 and 20,000 US dollars. You can see in this range, look at the yellow dots and the blue dots. They're actually quite high. Certainly, the average would be around 6%. So that's really why I said that China can no longer grow at 9 and 10% per annum. Those days are over, but it can continue to grow at around 6% per annum on average over the next, say, a decade or so. Now, this is another interesting chart. On the upper side, I have the savings rate of China, and the blue line is the savings rate of the United States, national savings rate. You can see the Chinese savings rate is over 40%, and the US savings rate is below 20%. All you have to do is ask yourself, if you save 40% and your neighbor only save 20%, what happens 10 years later? You'll be vastly wealthier than your neighbor. So this is actually what's going to happen. The other thing I want to say is that from various reported surveys, Hurun, Forbes, and so forth, we know that there are supposedly more than 600 known US dollar billionaires in China, supposed to be more than the number in the United States. These are known billionaires. There may be many more unknown US dollar billionaires in China. And over the past decade, many successful Chinese enterprises have emerged. In the 2022 Fortune Global 500 survey, there were 145 Chinese enterprises compared to 124 US enterprises. This shows how far China has become over the years. Now, the capital needs of these Chinese enterprises will provide the basis for the supply of both equity and debt securities in the Hong Kong capital market. China has also recently become the top country in terms of the total number of the top 1% most frequently cited scientific and engineering articles published by its nationals. This is just recently. This shows that in terms of innovation, China is also beginning to come into its own. It's no longer just a copycat, just imitation, and it's coming there. And so it's on the verge of a breakthrough in innovation and technology. There will be many startups in China, and of course also many failures resulting therefrom. But I think a small number will manage to become unicorns, which is also the case in the US. You have many failures, but this provides the basis for Hong Kong, Shenzhen, and the Greater Bay Area to become the venture capital and startup hub for China and East Asia. The vast Chinese market attracts entrepreneurs, innovators, and venture capitalists because of its economies of scale. That's why Hong Kong can never make it on its own as a venture capital hub, but Hong Kong with the mainland, with Shenzhen, can actually become a major startup and innovation hub. Now, the next trend I'd like to look at is the China-US strategic competition. We have to accept the fact that this will be the new normal for the coming 10 years. The decoupling of the Chinese and US economies, including the capital markets, to a certain extent, is inevitable. We have to accept the fact. Maybe it'll get better after 10 years, but we have to accept the fact that some decoupling is inevitable. It will bring challenges as well as opportunities to Hong Kong, for example, through the repatriation of Chinese enterprises currently listed abroad. I mean, we read that 5 large Chinese enterprises have delisted from New York, and most likely, if they don't have a listing in Hong Kong already, they will have a secondary listing in Hong Kong very soon. Hong Kong can also intensify its collaboration and cooperation with continental Europe. To the continental European countries, China is viewed as the most important customer, not a competitor. The China-US strategic competition will also accelerate the use of the renminbi as an international medium of exchange. That is also inevitable. Now, let me talk a little bit about renminbi internationalization. Renminbi has been current account convertible since 1994. That means you can spend any amount buying and selling, and there's no problem. But there are restrictions on capital flow still. And that actually gives Hong Kong a slight advantage in the sense that we don't have any capital control. But I want to say this following. 10 years ago, or slightly more than 10 years ago, China settles all of its international transactions in the US dollar. But today, that has changed. And this is because if you really think about it, own currency settlement between two countries is always better because it reduces the transaction costs. You don't need to change your currency into dollar and dollar again to another currency, and it reduces the exchange rate risk. So if countries can trust each other's currency, it's always better to do it in their own currency. And that is really happening more and more countries have entered into own currency settlement agreements with China. For example, Indonesia and of course Russia. Russia doesn't have too many choices. But they settle their international transactions with China in renminbi and their own currencies. Thus, what would happen eventually is that households and enterprises in these countries, they will hold significant renminbi balances, especially if they run a surplus in trade vis-a-vis China. Now, if you think about infrastructural projects in ASEAN and Belt and Road countries that use Chinese contractors and equipment, they will require renminbi financing. And this can be done through renminbi-denominated bonds in Hong Kong, bought and sold in Hong Kong in renminbi. Now, Hong Kong is clearly the global center for offshore renminbi. This chart shows you the share of settlement in China's foreign transactions. You can see it reached a peak around 2015. Then because of a sudden drop in the renminbi, people stopped doing it. And it took a little while to recover. But this is now actually up to around 40%, holding steady around 40%. It might actually increase some more in the future. This other chart is also interesting. The red columns are the share of world trade in 2020. You can see that the blue column is the share of world settlement in that particular currency. The first two columns refer to the US. You see, even though the US share of world trade is around 11-12%, its share of world settlement is 40%. That means plenty of third countries, they settle in US dollars. Now the second is the Eurozone. You can see the Eurozone itself, they account for about a quarter of world trade. And they also have other countries settling in euro. Now if you look at China, Chinese trade share is actually higher than the US, the red column to the fifth. But the renminbi only accounts for 2% of world settlement. Well, what this says is that there's plenty of room for the increase of use of renminbi in world settlement. And it will actually occur gradually and increasingly. Now, we know the following is true. The Hong Kong dollar and the renminbi, they circulate freely and widely in Macau, even though neither one of them is legal tender. You cannot use Hong Kong dollar or renminbi to pay fines or taxes in Macau. You have used the Macanese pataka, but other than that, I think all the shops in Macau, all the casinos, they'll be happy to accept your Hong Kong dollar or your renminbi. I think within the Greater Bay Area, it is expected that the Hong Kong dollar, the Macanese pataka, and the Chinese yuan will circulate in parallel. That's what makes it a region, a Greater Bay Area, is to have circulation of all three currencies. However, these three currencies will remain the sole legal tender in the respectively Hong Kong, Macau, and the GBA Hong Kong and Macau. The direct use of the renminbi in Hong Kong capital markets should not only be allowed but also facilitated given the significant offshore renminbi deposits in Hong Kong financial institutions. We have to allow people to use them to purchase goods and services, but more importantly, to purchase securities. And we can always settle using the closing rate of the day. Similarly, it should be possible for us to buy and sell securities on the Shenzhen Stock Exchange with the Hong Kong dollar. We're all in the same Greater Bay Area. Again, settlement at the closing exchange rate. Now, with the introduction of the digital central bank currencies, I'm a big fan of central bank currencies, the ECNY and EHKD, I think parallel circulation of two currencies should not pose any serious problem. Now, I don't have time to talk about the multipolarization of the world as well as the COVID-19 epidemic, so we'll find another time to discuss this. But I want to go back to say what's the Hong Kong strengths and weaknesses. Now, this is a topic that many people have talked about. I won't spend any time on it. But I want to say the following. First of all, the fixed Hong Kong dollar US peg used to be an anchor for the Hong Kong economy. It was from the mid-'80s up to now. But it could become its Achilles heel because of potential U.S. sanctions. I'm not saying that it's coming, but it's possible. But what is Hong Kong's unique and most important comparative advantage? It is really the confluence of the large demand and large supply of assets emanating from the mainland. Already, mainland enterprises account for more than half of the annual IPO volume and turnover on the Hong Kong Stock Exchange. The wealth of mainland China provides the backstop for Hong Kong as an international financial center. Moreover, the wealth holders on the mainland, they need to diversify their portfolios by geography, and Hong Kong can provide an easy way to accomplish it. What about potential competitors? Singapore has neither the standby buying power nor the supply. So that means it cannot really be a very effective competitor. Saudi Arabia and UAE, they have lots of buying power, but they cannot provide the supply. You can buy Saudi Aramco, but that's about all you can buy on the Riyadh exchange. Tokyo actually is the only city in Asia that actually potentially have both the demand and the supply. But Tokyo does not seem to want to become an international financial center. If it wanted to be, it could have become some time ago. And Japan also doesn't want, for many reasons, the yen to become a significant international medium of exchange. Shanghai is a potential competitor to Hong Kong, but China is actually large enough. I've always claimed that to have two or even more financial centers is a big place. So there should be an appropriate division of labor between Hong Kong and Shanghai. And finally, both Hong Kong and Shenzhen are part of the Greater Bay Area, and their economies complement each other. They should intensify the collaboration and cooperation. Perhaps one day, the two stock exchanges can merge into a single entity. Now, I want to say some directions for future expansion, just a few. I'm sure that the distinguished panelists will actually suggest many other possible directions. First of all, the Hong Kong Stock Exchange should try to expand its geographical footprint and selectively recruit successful enterprises outside China and Hong Kong for a secondary listing. Secondary listing, much easier. Don't try to go for a primary listing. Saudi Aramco, Airbus, Samsung, Apple are some possibilities. Hong Kong actually badly needs to develop a deep, wide, and liquid long-term fixed income market in both Hong Kong dollars and renminbi. I'm sure Mr. Aguzin realizes this. It's not easy to do, but you have to do it to be complete. Both the demand and supply of renminbi-denominated bonds should be rising over time. Renminbi-denominated infrastructure and green bonds issued by the mainland central and local governments and by ASEAN and Belt and Road countries should be well received in Hong Kong. Finally, I think on the basis of the enormous backstop wealth of the mainland, Hong Kong has the potential of becoming one of the few global reinsurance centers. Concluding remarks. The future of Hong Kong as an international financial center is excellent. With the buying power of the Chinese investors on the demand side and the successful Chinese enterprise on the supply side, Hong Kong Stock Exchange cannot help but prosper. Hong Kong should capitalize on the fact that it is a global center for offshore renminbi. Finally, the economies of Hong Kong and Shenzhen together can eventually rival the success of Silicon Valley, Route 128, and NASDAQ combined in the US. Thank you very much.
Our second speaker, Mr. Nicolas Aguzin, Chief Executive Officer of Hong Kong Exchanges and Clearing Limited, points out that the world needs more connections, and Hong Kong is the right international financial centre in the right place at the right time.
It's great to be here, and thank you for our Hong Kong Foundation for organizing this Insights Forum. Many of you know that a little over a year ago, almost a year and a half ago now, I joined the HKEX after 30 years at another institution. Actually, never changed jobs in my life. I had one job my whole life, and a lot of people ask me, why HKEX? Why are you doing this at this time? And the short answer is that I thought this was an exceptional opportunity, and it was the right time and definitely the right place, which are very relevant things to discuss today at this forum. Now, maybe a lot of you are thinking, but how about all the complex backdrop, geopolitics, macroeconomic volatility, the pandemic, and all of this? And of course, I did not overlook any of these headwinds and everything that we have to contend with right now, and all the challenges that we're facing in Hong Kong. But I have always been interested more in the long-term perspective, not in the short-term view. And I have always tried to focus on the facts and just like get the actual figures. So let's take a look at how Hong Kong performed as an IFC in recent years. Hong Kong in 2022 ranks as the world's third global IFC in the latest Global Financial Centers Index. It actually was named by the Fraser Institute of Canada as the freest economy in the world, number one. Our markets have remained deep, liquid, vibrant. The turnover of our exchange has been last year 167 billion Hong Kong dollars. That is a 92% increase compared to 2019. Now, over the past few months, we have seen quite a bit of a slowdown, but that's the nature of markets. Markets go up and down. HKEX remains one of the leading IPO fundraising venues. We are today Asia's largest and the world's second largest biotech fundraising hub. And we're becoming the capital raising venue of tomorrow too. 90% of the capital raised in 2021, and the number is similar for 2022, is new economy companies. Our markets have continued to diversify. We're growing very fast in derivatives. Our ETF franchise is also a really good example of the potential growth of our markets. International participation in our markets, it's also growing. Over 43% of the participants represent international investors. Hong Kong is also a premier asset and wealth management hub for Asia and the world. It is now the second largest private equity hub in Asia in terms of assets under management and funds raised, and it's the leading hedge fund hub in the Asia-Pacific region. So despite all the headwinds, Hong Kong as an IFC has not only survived, it has demonstrated remarkable resilience. It has actually grown. It has grown because it's rooted on strong, solid ground. Hong Kong offers global investors and issuers a financial environment that is familiar and trusted, from its legal system to its financial infrastructure, regulatory regimes, tax regime, professional services, the talent pool. It is the most international city in China and the most Chinese city outside of the mainland. This gives it an unrivaled position as a super connector between East and West. So Hong Kong has a very unique position as a gateway to China, strong fundamentals as an IFC, and an incredible resilience and adaptability. This is what I mean when I said the right place. So how about the right time? At HKEX, we believe the best years of Hong Kong as an IFC are ahead of us. From its position of strength, we expect Hong Kong to move forward to capture the global opportunities of tomorrow. We're poised to capture some of the major megatrends that are shaping our landscape. This includes China's next phase of growth, the global sustainability agenda, and the explosion that we're likely to see in technology innovation. Let's start with supporting facts around China's continued growth. Right now, China has significant untapped pools of capital looking for ways to diversify. And international investors are also massively underinvested in the country. At the same time, China has been reforming its capital markets faster, broader, and deeper. As its economy grows, its household will increasingly allocate more wealth and a greater proportion of their wealth to capital markets. As a result, it is my view that its onshore markets are expected to grow over 100 to 100 trillion US dollars in the next decade. Right now, it's about 30 trillion US dollars. We call this the Big Bang of finance. It will reshape the future of global financial markets for years to come. Hong Kong has an established role in facilitating the two-way capital flows between China and the world. And as we prepare for the Big Bang of finance, HKEX has been enhancing the regulated and trusted infrastructure that is already in place. Connecting China and the world is one of our strategic imperatives. When we look at the opportunities connected to sustainability, this is clearly the right time too. While the COVID-19 pandemic has been very difficult, it has also helped to crystallize thinking across the world on other global challenges such as climate change and sustainable growth. Consumers and investors expect business to drive, support, and reflect the changes they want to see in the world. The road to net zero carbon is a long one and will require a lot of capital. This is particularly true for China, as the world's fastest growing economy and the largest carbon emitter. It will need over 20 trillion US dollars of green investments in the next 15 years to meet its decarbonization goals. Hong Kong has a key role to play in supporting these roles. Its potential as a green finance center is recognized by China. It has been designated as the Green Finance Center for the Greater Bay Area. And HKEX plays a vital role in supporting mainland and Hong Kong companies on their net zero journey through listing regulation, education, and innovation. We're creating a sustainable finance ecosystem with the right channels and products that help finance a low carbon and sustainable economy. And then there is the relentless march of technological innovation. This also has brought into sharper focus by COVID-19, from the speed at which viable vaccines were developed to the use of digital technology to keep economies running and connected during the lockdowns. In China, there's a strong policy support for innovation, and the Greater Bay Area is spearhead of the country's innovation drive. It has a cluster of world-class science and research institutions, leading tech companies, a vast pool of talent, and in Hong Kong, it has something valuable and unique, a connected international financial center. With the right coordination, the Greater Bay Area will be greater than the sum of its parts, as a new global innovation powerhouse is emerging here. And Hong Kong is its IFC. This gives Hong Kong a unique role to play in connecting the ideas of some of the world's most promising, up-and-coming innovators with global capital. Indeed, it is already here. The HKEX listing reforms of 2018 have already made Hong Kong a premier capital raising center for the companies of tomorrow. The Big Bang on finance, the global sustainability agenda, the explosion of tech and innovation. At HKEX, we're poised to capitalize on opportunities by building the marketplace of the future. We envision the marketplace of the future as being supported by three pillars: connecting China and the world, connecting capital with opportunities, connecting today with tomorrow. The world wants to connect. The growing untapped pools of capital in China want to connect with global markets. Capital wants to connect with ideas. Everyone wants to connect today and tomorrow. The world needs more connections. And Hong Kong is the right IFC in the right place at the right time. It is a super connector that has been evolving in its roles for decades. At HKEX, we're committed to continually enhancing and expanding the infrastructure that enables Hong Kong to continue to play that role. Thank you very much.
Our third speaker, Ms. Amy Lowe, Chairman of Executive Committee, Private Wealth Management Association, says that Hong Kong, as an international financial centre and leading wealth management hub, must continue to be nurtured and cherished in the midst of the current volatile environment.
First of all, I would like to thank our Hong Kong Foundation for having me to share the wealth management industry and how we enhance the Hong Kong as an international finance center. Perhaps let me share with you a few data to show how important the wealth management industry for Hong Kong. I've been in the industry for 30 years. Over the last 30 years, we have seen significant growth in the wealth management industry for Hong Kong. But just to give you a number, so the asset under management in Hong Kong amounted to Hong Kong dollar 10.5 trillion. That's significant. And when you look at the CAGR growth every year over the last 10 years, it's talking about 15%. And particularly for the last few years, back in 2019, we are talking about annualized growth rate of 21%. So that's significant. Obviously, what really also important for all of us is also to look ahead, what kind of growth are we talking about here? So that's one number that I want to highlight to all of you. And the other one is also, if we look at the number of a high net worth individual, actually, Hong Kong is second to New York in terms of the number of high net worth individual globally. And what really attracts Hong Kong for all these high net worth individuals, and we look at some of the number, is all the robust capital market opportunity and also the world-class regulatory kind of framework. And that really helped to attract a lot of these high net worth individuals. And thirdly, the number I also want to share with you also is the foreign direct investment. Actually, Hong Kong also ranked number 3 after China and US. And last year alone, we are talking about US dollar 141 billion foreign direct investment in Hong Kong. And so these are also the opportunity that a lot of the investors treasure, particularly for some of our sophisticated investors like the family offices. Then the question is, what lies ahead? What can we do more in order to foster Hong Kong as an international finance hub and also a leading wealth management hub? Because all the other centers also fight to escalate and elevate their wealth management hub status. I would say there are 4 growth drivers. Number 1 growth driver is Mainland China and also the GBA. Because every year, the Hong Kong Private Wealth Management Association, which has 45 members banks in Hong Kong, or the major local, international, and also the Chinese banks in Hong Kong, we did a vote and asked them, what's the most important growth market for you? And unanimously, all the survey members banks said, China is the number 1 growth market. Then the question will come, there are concerns about the growth in China, given all the geopolitical situation and also the pandemic, the lockdown. And I would also like to share with you the number that we have on the wealth report from Hurun China. So in 2021, if we look at particularly one segment, those families who have total wealth of over 100 million renminbi. Actually, we have seen 2.5% increase in this category, and that amounted to 130,000 households. So while we see some signs of slowing growth, the figure also, the numbers speak for itself. There's still a lot of wealth creation down there. And perhaps I can also share with you the number, because in the past we've been also conducting a lot of those billionaire reports. In China, we are talking about 1 new US dollar billionaire in every 2-3 days. So that's the amount, the pace of wealth creation. So obviously, when the soil is fertile, everybody wants to farm here. So lately, the association also did a survey looking at where are the banks housing or having the regional wealth management head in the region, be it in Hong Kong, in other locations. And interestingly still, 2/3 of the regional head of wealth management industry sit in Hong Kong. And as commercial organization, you will go where the opportunity lies. And so meaning the soil is still very fertile out here. And as a matter of fact, we've been seeing really talent war, and also every bank here try to fight for increasing market share. And the other opportunity that linked to the mainland China is also the GBA, the Great Bay Area, because with the Great Bay Area, you're talking about 11 cities, 80 million population, and 1.7 trillion GDP. So for banks like us, rather than going every city, GBA, focusing on GBA. And you have that 80 million population that I can target to. Obviously, right now, we also look for the border to open. And that's also critical. But otherwise, this represents a lot of opportunity there with the GBA, the Great Bay Area. So I know some banks are also building up the GBA team in targeting all the high net worth, ultra high net worth individual in the region. And this other location, other center will not have that kind of advantage, the proximity. Because within the GBA, you are talking about 1 hour by travel, that you can reach this 18 million population. And for me, for us as a management, I can also easily do the management oversight among this city here. So we welcome also very much the Wealth Management Connect that has been rolled over, that has been launched. Obviously, we have been giving a lot of suggestion to the government, to the regulators, how to get more traction. For example, by also expanding the product scope and also increase the quota, because currently you're talking about 1 million RMB individual quota. That's more retail, and to be honest, that's not also playing to the strength of Hong Kong as a wealth management hub. So these are some of the things that we've been also lobbying to the government there. And so that's one growth driver, mainland China and GBA. And that's the collective voices we've been hearing from the industry. Second growth driver is family offices. Because when the family offices come, the rest will come. For the family offices, Hong Kong also has a long track record in serving all these kind of family offices, having very strong expertise on wealth planning, philanthropy, and family advisory. And obviously, this is a very, again, another very fertile soil that everybody wants to fight for. And obviously, we are here not without any competition. So I think what's important is the government, the regulator, also has to provide a more favorable operating environment for these family offices to flourish. Then third growth driver, I would say, is sustainability. I would say all of you will agree with me, because if there's one agenda that's on top of everybody's mind, be it regulator, investor, corporate, government, is ESG. So we've been also seeing increasing interest from the investor on the ESG. As a matter of fact, we conducted the Global Family Office report. And from that report, over 50%, 56% of the family offices have invested in sustainable investing. And they said they will increase their investment into the sustainable investing. So I think if Hong Kong can really position ourselves as a sustainable ESG hub, a lot of more opportunity to capture. But one pain point is that there's a shortage of the ESG talent out here. So how are we going to attract more talent? Then finally, if I can touch on digitalization, because the whole pandemic has accelerated digital transformation, and even for banking. So one of the pain point or opportunity for wealth management or finance industry is how are we going to leverage on digital solution, digital kind of platform to capture the new young growth segment. So now we've been also working together with some of the fintech, because other than bank, the fintech startup are also offering digital wealth solutions there. So if, again, Hong Kong can position themselves and offer that kind of platform to collaborate, to foster the digital, that would be helpful. And so to conclude, I would say Hong Kong as an IFC and also as a leading wealth management hub is here and must continue to be nurtured and cherished in the midst of all this environment. And I'm very confident that with concerted effort from everyone, Hong Kong as an IFC and wealth management hub is here to prevail. Thank you.
Our fourth speaker, Dr. Zhehuan Chief Economist of the Bank of China Hong Kong Limited, points out that RMB internationalization drives Hong Kong's international financial center status to a higher level.
It's my great honor to participate in this panel discussion. Professor Lau's presentation is very enlightening and inspiring me to share with you 3 points. Over the past decades, the journey of RMB internationalization added a new and powerful driver to Hong Kong's international financial center status. In recent years, Mainland China has put most of the cross-border RMB business pilots in Hong Kong, which cultivated the Hong Kong RMB business. Benefiting from the interconnection mechanism with Mainland China, the RMB business in Hong Kong developed very rapidly. And now Hong Kong has developed into the world's largest RMB capital pool, the world's largest offshore RMB foreign exchange market, and the world's largest RMB dim sum market. All this development further consolidate and strengthen Hong Kong's international financial center status. That's the relation between the RMB internationalization with Hong Kong's financial center development. I want to share you the 3 points. I think the first pillar of RMB internationalization is the market infrastructure. As RMB internationalization enter a new phase, a lot of milestones have been reached in the past 20 years. Yes, it's 20 years since the beginning. In December 2003, PBOC appointed Bank of China Hong Kong as the first Hong Kong RMB clearing bank and engaged our bank to set up the RMB personal business and began the offshore RMB market. In February 2004, Bank of China launched the 4 personal RMB services and provide clearing services even before the Mainland China officially introduced cross-border RMB settlement pilot in 2009, which marked the beginning of RMB internationalization. In the past few years, PBOC appointed 27 clearing banks worldwide and built up an extensive global RMB clearing network, covered major financial centers. In 2015, the CIPS was officially launched, and the Hong Kong RMB RTGS system joined the CIPS, playing an important role in the CIPS. Nowadays, the vast majority of RMB clearing business in Hong Kong has been switched to CIPS. And the Hong Kong offshore RMB market infrastructure included the Hong Kong multi-money RTGS system, the clearing and the custodian system for debt instrument, the central market unit, security settlement system. All of this system build a network and provide a strong foundation for RMB business in the global market. The second pillar of the RMB internationalization is the policy framework, including the current account, the capital account, and the financial market connection. And all of these policies show that the RMB internationalization was policy-driven. After 2008 global financial crisis, Mainland regulator launched several kinds of RMB-related policies and built up a whole policy system focusing on key items to meet market demand and promote RMB internationalization. The scope of RMB business in Hong Kong was expanding along with the policy change. I won't go through every policy, but I think all these policies provide RMB business a strong basis. In recent years, RMB business in Hong Kong has continued to rebound from current account to capital account, and the investment and the financial business, asset management and the financial products trading become more active. The third pillar of RMB internationalization is the financial market opening in mainland China. RMB internationalization and the opening of financial market in China has been carried out simultaneously and mutual benefit each other, which is a major feature of the China's market opening. Given China's steady economic growth, global investors have been interested in investing RMB assets for years, and Hong Kong played a very important role in this process. Now, Hong Kong is the offshore RMB clearing center. Every data show that Hong Kong's role in RMB internationalization increased significantly. According to SWIFT data, Hong Kong's RMB payment value accounted for 72.3% of the worldwide in last year, making Hong Kong the global main RMB clearing hub. Also, we can see Hong Kong's markets, deposits, and loans. The scale of Hong Kong's RMB pool has exceeded 900 billion last year, accounting for more than 50% of global share. Hong Kong's RMB investment and financing business rebounded quickly. The balance of RMB deposit in Hong Kong has risen from 6 billion at the end of May 2004 to nearly 900 billion at the end of April this year, an increase more than 100 times, and provide basis for RMB in the global use. Looking forward to the development of Hong Kong's global offshore RMB hub, we still have many things to do, at least 6 items. At the policy level, the mainland China has incorporated RMB internationalization into national development strategy, showing its determinant to promote the international use of RMB. The 14-5 plan clearly states to promote RMB internationalization steadily and cautiously, maintain market-oriented and corporate independent choice, and create a new mutual beneficial cooperative relationship based on the free use of RMB, which create a blueprint for the development of RMB internationalization. To conclude, Hong Kong's global offshore RMB business hub has entered an important strategic period. With support from the central government and the efforts of the Hong Kong government and the society, we will continue to push Hong Kong to the higher level as the global offshore RMB business hub. Thank you.
Our fifth speaker, Mr. Norman Chan, former chief executive of the Hong Kong Monetary Authority, says that he has always held the view that Hong Kong is uniquely positioned to be the best gateway to intermediate trade and capital flows between mainland China and the rest of the world.
In the next few minutes, I'm going to make some remarks, and I will divide my remarks into 3 parts. First part will be my personal takeaways from President Xi's very important policy statement made on 1st July here in Hong Kong. Second part is talk about my view on the positioning of Hong Kong as the premier or the best IFC in Asia. And lastly, I'll spend a bit more time to share with you a couple of suggestions, my suggestions, on how to strengthen Hong Kong's competitiveness as an IFC. First of all, let me share with you my takeaways from President Xi's statement, which are pertinent to the theme of the seminar today. First, President Xi fully endorsed the one country, two systems principles, which has maintained the stability and prosperity of Hong Kong in the last 25 years. There's a track record of 25 years, and the central government has made a full endorsement. And one country, two systems has also helped Hong Kong to play a crucial role, in President Xi's own words, in supporting development of China and the great rejuvenation of the Chinese nation. 中華民族偉大復興. This is first takeaway. The second one, President Xi also said that as one country, two systems is such a good and resilient system for Hong Kong and for the nation, there is no reason or need to change it after 2047. And this is my interpretation. That means the one country, two system for Hong Kong will continue for a very, very long time to come. The final one is that President Xi said the central government cherishes the uniqueness of Hong Kong and its contributions to the nation, and will support Hong Kong's continued development as, amongst other things, an international financial center. These are very important messages and, more importantly, assurances from the central government, which provide the foundation and confidence for Hong Kong to continue to charge forward under the one country, two systems principles. This is my part one. My second part, how do I see the position of Hong Kong as the premier IFC in Asia? I've always held the view that Hong Kong is uniquely well positioned to be the best gateway and conduit to intermediate trade and capital flows between mainland China and the rest of the world. To me, a successful international trade and financial hub must be close to the markets and customers it serves. Assuming that China would continue to maintain capital account controls and only relax the restrictions gradually and incrementally over time, no mainland cities or other overseas financial centers can be a better place than Hong Kong in intermediating financial flows into and out of mainland China. That's my view. Hong Kong's position as the premier IFC in Asia can be borne out by the amazing fact that the share of contribution of financial service sector to Hong Kong's GDP has grown from just over 10% in 1997 to over 23% recently. Hong Kong's position as an IFC will continue to strengthen, given, as other speakers already talk about, the immense opportunities presented by China's economic growth and the development of the Greater Bay Area in the next decade or two. Most importantly, Beijing is fully supportive of the policies and measures to facilitate Hong Kong's development as an IFC. That's very important. I come to my last part, a couple of suggestions on how to strengthen Hong Kong's competitiveness as an IFC. There are three suggestions. The first one relates to Hong Kong's mainland financial connection. We need to further expand the various dedicated conduit channels for capital flows between Hong Kong and the mainland. We just heard we already have the Stock Connect, Bond Connect, Mutual Recognition of Funds, Gold Connect, Swap Connect, and lately the Wealth Management Connect that Ms. Amy Low talked about within the Greater Bay Area. But this is far from enough. New and wider channels must be developed in order to meet the increasing demand for more open and diversified flows of money and capital between the mainland and the rest of the world. I believe that bolder and more innovative experimental schemes within the Greater Bay Area can and should be rolled out. We talk about other great Bay Areas, Tokyo Bay, San Francisco Bay, and maybe New York Bay. if our Greater Bay Area is going to surpass these great Bay Areas and become the largest and most dynamic Bay Area in the world, we must do more to overcome the impediments to the free movement of the basic factors of production. Goods, including services, people, and capital, especially capital, the last one. One has to bear in mind the biggest difference between us and this Bay Area is that they are one country, one system. We have one country, two systems. One possible experimental scheme is what I have suggested before, a form of capital connect that will allow freer flow of capital within the Greater Bay Area for capital raised through the designated funding platforms in the Greater Bay Area, such as the stock markets and the bond markets. To ensure that the funds raised through the Capital Connect do not circulate outside the Greater Bay Area, it would be possible to deploy the latest blockchain technology to trace the fund flows and prevent its circulation and use outside the Greater Bay Area. My second suggestion relates to the transformation into a digital world and markets, which Emilio talked about just now. Whether one likes it or not, the world is now entering rapidly into a new era of digital age. The old ways, the conventional ways of undertaking most of our economic and social activities, such as communication, production, distribution, intermediation, etc., will be replaced by digital format or platforms. This certainly includes financial services. Those centers which can learn to transform themselves will stand to gain, while those who drag their feet will inevitably be left behind. I believe there's an urgent need for Hong Kong to move at a faster pace in this digital transformation. This transformation is much more than upgrading banking and trading systems from analog format to the digital format. For example, Singapore is ahead of Hong Kong in promoting the development and trading of digital assets. A large number of experts and practitioners in blockchain technologies have now moved to Singapore as they see more opportunities there. While I'm not advocating any public policy shift in favor of cryptocurrencies, it should be borne in mind that digital assets are much, much wider than cryptocurrencies. There have been misgivings about blockchain technology as some people have mistakenly equated blockchain with Bitcoin or some highly speculative cryptocurrencies. By the same token, some have thought quite wrongly that metaverse is just about virtual games and pure financial speculation, without realizing its huge potential in its application in many other settings. For example, the use of virtual reality or augmented reality in a metaverse context to conduct business meetings or social gatherings present very exciting and profound prospects. As we move from an analog world into a digital world, inevitably two types of assets will emerge. First, purely digital assets, such as digital image, music, or artworks in the form of NFTs, will not only become the trend, but also a very big industry or market. So such digital assets will need to be assimilated into the formal financial system somehow and sometime. But purely digital or intangible assets, while becoming very big, cannot and will not displace conventional or tangible assets. Conventional or tangible assets such as fine wines, artworks, antiques, etc., will need to be digitized, also in the form of NFTs. This tokenization of conventional assets will greatly enhance the marketability and liquidity of millions and millions of otherwise illiquid assets. The use of blockchain technology and smart contracts will fundamentally transform the ways in which many conventional assets are held, owned, and traded. Hong Kong must recognize and embrace this fundamental shift to a digital world and take proactive steps to facilitate the transformation. We must seize the golden opportunity to become the leading hub in Asia in dealing with different kinds of digital assets. Quite apart from the technology side of things, such as blockchain, smart contracts, AI, and big data, Hong Kong will need to put in place the necessary legal and policy infrastructure so that the digital assets can be created, custodized, traded, settled, and financed safely and efficiently in Hong Kong, and in compliance with the international standards or best practices. Time's up, I've been told. So my last suggestion relates to points already mentioned by Nicolas and Amy about green finance, sustainable finance. So my only comment on this, green finance and sustainable investment. The government, regulators, stock exchange, and financial institutions and professionals must work doubly hard together to develop and consolidate Hong Kong as the leading ESG green financial hub of Asia. Thank you very much.